Welcome to part 2 in this trading bootcamp series. In this video, we're going to have a look at trading price candlesticks. What are they? How do we read them? And how do we use them in trading? So let's get stuck into the charts and have a look at the anatomy of a price candle. So we can see here, we've got a couple of examples. Okay, now traditionally on a default trading chart, you'll see these as green and red candles. Now, green typically means a bullish candle, okay? Bullish meaning up in price, and red typically means bearish candle, down in price. But how do we read them, and how do we understand how the colors are actually quite irrelevant, and we really need to understand price's journey over time, okay? That is the most important thing, understanding price's journey over time rather than just the color of the candle itself. So if we have a look at this green or bullish candle to start, for example, okay? So with a green candle, this is meaning that it closed higher than what it opens, okay? So here we have the open price, okay? So these candles can represent any time frame. So let's just imagine each one of these candles is a 4-hour candle, but we can view these in any time frame, and we'll get more into that in the next lesson when we look at the fractal nature for price. But let's just imagine that this is 4 hours worth of price action that we're looking at, okay? Meaning that at the start of the 4 hours, price opened at this point. During the 4 hours, it somewhere traveled down to here. It traveled somewhere to the high, and it closed at this point here. Okay, so the open and then the close. Then we have the highest point price traveled to and the lowest point. Okay, so this could happen in any order. Okay, so obviously we know for a fact that it opened here. Potentially it went up to the high. It could have then come down to the low, and then it closed out here. Okay, so we can extrapolate from this that we have the exact open price, we know the close price, and we know the point where it's highest point of price and then the lowest. Okay, so if you're sitting there watching this candle print, it's going to look very, very different during that 4-hour period compared to when it closes and we have all of this data. Okay, so during the candle being printed, price would have been down here at some point, it would have been up here at some point. But at the end of the 4-hour period, the open was here, the close was here. So we can understand basically what happened in the story of price. Okay, now we look at the bearish example or the red candle. Okay, it's the opposite. Okay, we opened here, we closed here. This was the highest point price went to, and this was the lowest point. Okay, so somewhere along the journey from the open, we might have come down to the low, then up to the high, and then close down here. Okay, so it's really, really important to understand the open, the close, the high, and the low. Right now, I want to get to a point about candlesticks patterns and names. Okay, all different candlesticks have different names, but the names are really irrelevant. What is important is understanding the journey of price. And I want to talk about why color is not necessarily representative if it's a bullish or bearish candle. Okay, so we're looking at two examples here. Okay, so we've got a green example on the left and a red example on the right. Okay, so green, technically our brain will see green and think, oh, that's a bullish candle. And when we see the red, our brain will associate that with bearish price. That's a bearish candle. But when we actually look at this journey of price, we can see it's quite the opposite. Okay, this is actually quite a bearish candle. And this is quite a bullish candle, meaning that it's showing signs of wanting to go up. And that is because here we can see price opened here, closed here. But during its journey, it traveled all the way up here, but was unable to close. Price pushed all the way back and it opened. Okay, so even though it opened here and it closed slightly above, we can see that even though price was pushed all the way up, there was a lot of selling pressure in the market. And this candle was only able to close basically back down where it started. Okay, it's a little bit higher, and that is why it's green. Okay, it's only green because the closing price is above the opening price. So it's really important to understand this whole journey. Okay, see what the journey is telling us. Now, this is quite the opposite. Okay, it's red because the opening price is above the closing. Okay, so it closed below where it opened, so it paints it as a red candle, but it's actually quite a strong candle, quite bullish, because we can see price pushed all the way down here, yet there was enough buying in the market to push price back up and to close up at this level. Okay, so it's really important to understand that these colors are quite irrelevant, and I'm going to show you in a second the colors I use on my charts to help remove a lot of these emotions. And I strongly recommend you do the same, because the green and the red have such a mental connotation with our brains. Okay, green means go and good, and red means bad and stop. But that's not necessarily the case in trading at all. So when we're typically looking at a price chart, default price chart, you'll see something like this. Okay. Now we can even see some of those examples we talked about with the big wicks, right? We have like our previous example, okay, we have this red candle with a big long wick to the downside, meaning price was pushed down there. There was enough buyers here to absorb all that price, and it was a big reversal point in the market. So even though it's red, it's actually quite a bullish, strong reversal candle. We can sort of see a similar one up here, big long green wick, so it's green, but price is actually starting to reverse off this level. Now, price candles and the patterns we see, we need to use these in context of the rest of the things we're seeing in the market. And we'll get all into this in the rest of the lessons in this series in terms of how do we read this price chart as a whole. But in this lesson, I just want you to understand the concept of a price candle and what it is telling us. Okay, what is the color telling us? Okay, so we can sort of see similar here and here. We see these big long wicks down, prices being bought up. Okay, all that selling is being absorbed and price is moving in the opposite direction. But I want to talk about the colors I use on my candles and why I think it's very important. Okay, because when we see big red candles, this can be very scary. Okay, we see price coming down, it's red, it's bad, it's negative. Whereas sometimes when price moves down quite aggressively, these can be the best opportunities to buy and look for long opportunities. And exactly the same when price is pushing up, we're seeing lots of green, buy, everyone's getting emotional wanting to buy. These can actually be really good opportunities to sell. So what I like to do is you come into our settings here in TradingView, we go to the symbol, and I actually like to use some more neutral colors, okay? So we do a bit of a white color for the bullish, and I use a bit of a gray color for the bearish candles, okay? Now, for me, this smooths out a lot of the noise, okay? I can still see the difference between bearish and bullish. And when I say bearish and bullish, I mean up candles and down candles, okay? Candles that closed lower than when they open and candles that closed higher when they open, right? I can just see the difference between the two shades of colors, but not enough to make me emotional, okay? I don't see these down candles as really negative, and I don't see these up candles as really exciting and euphoric and wanting to buy, okay? So I think it's really important to change the colors. And obviously, whatever colors look good for your eyes, we all have different eyes and see different things on the charts. But for me, this quite neutral tone seems to work quite well in the market. All right, so now I've zoomed in on a bit of price action, and we're looking at 4-hour candles here, like in our first example. So each one of these candles represent 4 hours of price action. Okay, we're looking at a chart of gold, but this can be used on any chart, any asset, Forex, crypto, TradFi, commodities, does not matter. Okay, price candles are telling us the same things. It is price's journey over time. So I just want to take your attention to a few patterns we're seeing on the chart to really understand what we're seeing. Okay, and we start down here. We can see price had this big sort of strong push to the upside, came back in a bit of a pullback into the market, bit of a support and resistance level, and we'll cut more on that later. But we see it is technically a negative candle because it closes lower than it opens. Okay, so we can basically say it's bearish. It would have been red if we had our original colors, but we can see price pushed down very aggressively and failed to close down here. Okay, so a lot of buying stepped in to push price back up, and that ended up being a reversal in the market. We see the exact same thing here. We're in a strong upward momentum. Price pulls back. We see these big long wicks down here. Price gets bought up, and it's a strong reversal in the market. Then we see the exact same thing at the high. Okay, very impulsive push up. We see these big wicks up here, prices failing to close up here. We can use other things such as our liquidity and our supply and demand, which we'll get into later in the series. And then we can see price reverses. Okay, and then we can look at some other examples, these very strong candles. Okay, when a candle opens here and closes at the top with pretty much no upper wick or upper shadow, as it's sometimes called, this is a very strong sign of continuation. Okay, very much the buyers are outpowering the sellers in this situation, and we can see that it's a continuation. Okay, you can see similar here, not much wick at all. Price continued down with a very strong selling candle, a bearish candle pushing price down. So we need to understand what these candles are telling us. So really just sort of, paint the picture of what happened. Okay, you can zoom in, and this is a great way to practice. Okay, you can just come into individual candles and start understanding. And if you're learning and you still want to keep the candles as red and green to help you remember which ones are up and down, that's totally fine. But I strongly suggest going to neutral colors when you're ready. So we just look at this white candle here, for example. Okay, so we know it opened here, we know it closed here. Somewhere in the journey, it came up, came down, and closed back here. Okay, so you can do that with these candles and really start to understand price's journey, because these candles are basically going to become like your Bible. Okay, reading candles and price action is so important, and we need to understand what is happening in the market. What is price action telling us? Because price over time is a fact. We can see this as a fact. We can see over time, okay, and these are 4-hour candles. We can see different prices, and this price over time represents itself as price candles. Okay, so this is price over time, and this is going to become basically your blueprint for understanding the market. So that's everything on price candles. We're going to unpack this more as we go into more lessons and understand how we can use these price candles in conjunction with other concepts. So I'll see you in part 3.